The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
Well, long-term investors are full of hope and full of conviction that they know what's going to happen sooner or later, or they hope sooner, and that's certainly not been the case for gold. However, it is back in the headlines since it has been making some new all-time highs. And it's about all-time, darn near all-time. We get impatient waiting for all-time highs when they take more than a decade to come to fruition. And that's clearly the case. That's the case with gold. There are a lot of people who are gold bugs. They know that our congressional fiscal irresponsibility and the debt that we're continuing to use to buy votes, which is what a lot of legislation is all about, leaves us technically bankrupt, but people in other countries are still buying our bonds, which kind of covers over our irresponsible fiscal behavior. But back in 2011, we were on the radio, local station in Puget Sound, and in June, we said at that time, gold is peaking out. Right along with the emerging markets at the time, you should get out of them, and we took them out of our portfolios. And we had people who argued with us.
Quite a bit.
And those people are now saying, see, we were right, gold is higher. Well, yes, it is. But from June of 2011 to the 11th of March 2024, gold return using the GLD exchange traded fund is up 9% in a little over 12 years, not even doing 1% a year. Now that's a dedicated long-term investor.
Right. So the asset that's supposed to protect you from inflation wasn't even close to returning the rate of inflation over that time period. It just didn't do it. It's just not working out that way for gold.
Well, we've had this discussion with various parties and in various programs in the past, but gold is more, in my opinion, is more of a crisis asset. When crisis is going on, definitely, gold does better. And right now we have the war in Ukraine and we have the war in Gaza. We have China threatening to take over Taiwan. I mean, there's certainly potential crisis there. So there's some rationale that gold has a justification for moving higher. The other reason for people being committed to gold is the way it responded after gold came off of the fixed price. The government said we're no longer going to guarantee buying gold, and it went to an open market. Having been a fixed price for decades, all of a sudden people could actually own the physical gold, and there was a rush to do so. I mean, there was still the memory of the World War and people trying to move assets during the war to get out of countries and take some sort of wealth with them. Gold was heavy, but it had value if you could escape. And so that pent-up demand drove a massive rally in the price during the 70s and the early 80s. And looking back, hindsight bias left people with the assumption that because inflation was also during that period of time, that the two were tied together. Now, the returns were highly correlated, but they weren't cause and effect, because inflation didn't go away. You just said so. The return hasn't kept up with inflation over the last 12 years. So if it was an inflation asset, it should be worth substantially more than it is today because inflation has not gone away.
Correct. But if there's any asset out there with a great narrative, how are you going to get better than gold? It's solid gold. Everyone on Earth wants it. It's the universal currency, even though it's not actually a currency at all. But you can spend it anywhere. It's recognized anywhere on Earth. What a story for protection against inflation or crisis is like, well, you've just got to own gold, and there's no substitute. And man, for a long time, like you said, Don, 60s, 70s, into the 80s, it was also making money. So it was a great story. There was a good return. Everything was looking great. That's kind of disconnected a bit, and gold disconnected from inflation, and in inflationary times, it didn't offer much protection. And then even in times of crisis, gold became like the second thing you bought. First thing you bought was a U.S. dollar. It's really liquid, especially if you're a sovereign fund in another country, or a large corporate fund or a pension fund. Gold is much harder to move. Cash, that's easy. So you buy dollars, and that became the crisis buy. So gold continued to kind of slip down the list on things that you would your go-to buys in times of high inflation, or times of crisis, or a lot of pressure about a crisis coming. So that kind of took a little bit of the shine off.
Well, and what price has been rising lately, and gold finally has broken through and set a new high. But
Right.
well, just in the last couple of weeks since it broke the high, the all-time high, it's moved up. In the last 10 days, it's up about, what did I say? It was up 6%, I think, in 9 days.
6%, I think. Yeah, yeah, yeah.
Yeah, which over a 9 day period, that's a pretty decent return. The question
That's
is
moving.
is
Yep.
it going to continue doing that? That's a parabolic
Right.
return in a short period of time, and those never continue. The question with the crises that I just mentioned a moment ago going on, why isn't gold actually accelerating and attracting more money? And it does appear, at least the argument that's on the web today is that Bitcoin, well, it is, you can't hold it in your hand. It's a digital asset. You can't go pick it up and protect it anyway. And if you're an actual Bitcoin owner, and you've got a lock number and you lose that, you've just lost your asset. The
Right.
big change here is that the SEC approved Bitcoin in an exchange traded fund in the last month, and that has attracted a ton of capital. So the argument in financial circles is that Bitcoin is attracting the inflation hedge money that would normally go into gold. So while gold has a couple of weeks of exceptional returns, it now has competition that it has never had before in Bitcoin.
And they're kind of drawing that correlation between Bitcoin and gold. That ETF offering, when GLD became available, gold was around $400 an ounce, and it quickly ended up at $2,000 an ounce, because suddenly everyone could buy gold. You could buy gold with with the keystroke, instead of having to actually go buy gold from a gold exchange somewhere. You just buy it online like anything else. Now that's true of Bitcoin. And so people are saying, well, the same kind of thing is going to happen with Bitcoin. Now that anyone can buy it, you don't have to be uh, holding it yourself, and somewhere on the blockchain, and hope that you don't forget your password, because then it's just gone. Um, because these days, especially like you were saying, on as far as a crisis goes, it's very difficult to move a large amount of gold around. Gold, it's very difficult to move a large amount. It's very easy to move any amount of Bitcoin around. In fact, you don't have to move it. It's wherever you can access the internet. And so it's got some huge advantages. It also has some huge disadvantages, such as intrinsically being worth zero. That's a tough sell for Bitcoin. gold gold has a value attached to it. Bitcoin is valued at what the next person's willing to pay, and nothing else. So it's there's a huge difference there, and it's just a matter of how much faith. How much faith do you have in Bitcoin? And a lot of people seem to have quite a bit.
Well, it's also quite volatile. I mean, there is no doubt that the price swings in Bitcoin are severe. And,
Yes.
and it goes both ways. And people say I don't like volatility, but if there's no volatility, it means there's no rise in price.
Got to
Rising
have it, right?
prices mean there's volatility there, which means there's also downside on it. One of the
Yep,
offsetting arguments with gold is you would typically expect that if the price of gold is going up, gold miners should actually be doing fairly well.
correct.
However, gold miners sell their gold in the futures contracts because they want to know what they're going to get paid for today's work over time. So the correlation between gold metal itself and the gold mining companies right now is almost negatively correlated. I mean,
Right. And those
in
gold
fact,
miners, this article talks about the gold miners is where a lot of people would go try to get some exposure to the gold market. It was difficult to go buy gold prior to an ETF that would allow you to buy it. So you go buy gold miners. You go buy the gold mining companies themselves, and that would get you in the gold market. Now you don't need to do that. So they're secondary to buying gold, but now they're also even further down the list because people are buying Bitcoin before they're buying gold, before they're buying gold miners. So that's a tougher sell. So they're taking the heat also.
well, with Bitcoin, I mean, you what you have is a bet.
You do, correct.
Yeah,
That's it.
that's basically all you have. Uh,
That's true.
claiming it is an inflation diversifying asset is, other than recent price movement, is really hard to argue and substantiate with any financial theory because there's no data that can argue that. It just
Right.
simply isn't there. Uh,
When I have clients ask me about Bitcoin, I always tell them, never buy more than you can afford to lose, which is easy. But to give them an illustration, I always tell them, think about beanie babies. Bitcoins are beanie babies. They're worth what the next person will pay for them. But if the market collapses, there's no recovery for you. There's no other secondary market where it's like, you know what, that's still got some value. It's like, nope, it becomes a little beanbag and now it's worthless. Well, a Bitcoin is worth 70 grand because someone else will pay 70,000 for it. If they'll only pay $2 for it, Bitcoin's worth $2. So that's the risk you're taking. Like, well, that's the bet you're making, like you said, Don.
well, what's pushing prices right now is the excitement over the fact that it's pent up demand. I haven't
Yeah,
been able to buy Bitcoin, and now Bitcoin is readily available in all sorts of different ETF formats, and I can get in and out of it just like I would any other exchange traded fund, as long as there's volume there. I don't have any trouble. Call the broker or get online with my account, and I'm in and out. So it
correct.
is pent up demand driving price up, just like it did in the 70s with gold. When that ETF came out, the pent up demand was released, and it was FOMO, fear of missing out. I
Got to
don't
have
own
some of
gold.
that. Yep, got
Yeah,
to have
yeah.
some.
And so we put it in the account, and we find the same things basically going on here with Bitcoin. And there is a day coming, we don't know when it is, that this excitement will be saturated, and all of a sudden people will decide, not so sure I need this much of it. I think I'll start taking some money off the table. And like
Right.
a set of dominoes, that can accelerate very quickly on the downside. So
It
if you're
can,
there,
especially if there's nothing else to hold it up. And it's important to remember there's no more commerce. There's no more commercial transactions going on in Bitcoin now than there were a decade ago. It's pretty much the same. It's very minimal. So this really is buy it, sit on it, hold it, and then hopefully the price goes up. But so there's not like, well, even if the price goes down, there's all kinds of transactions going on in Bitcoin. There's really not. It's really minor compared to the dollar value of Bitcoin that's sitting out there. So there's really no backup. If the market collapses, you're going to get hurt. You're going to get hurt.
so let's call it for what it is, speculation.
Yeah,
And as you said earlier, if you can't afford to lose what you're putting in it, you probably should put in less or none at all. Wait until
there you go.
you're dealing with money you can afford to lose. This is one more reason why we continue to repeat that your investment portfolio needs to be monitored. Somebody needs to be paying attention to it. Investing is not rocket science, but it does require some software, some study, some discipline, and the willingness to make a decision that says that was wrong, it isn't working, I'm going to sell it and get it out of my portfolio before the losses magnify. If you
There
need
you go.
help doing that, that's what we do. Give us a call, send us an email. We'd be glad to have a chat with you and do an analysis on what's in your portfolio. Subscribe to our podcast, and if you go to our website, you can register for the next stock market update. Thanks for listening. Look forward to our next one. Have a great day.